Gold is up and silver is following close.
Mark Hollon with Hollon Gold and Hollon Gold Mining Adventures. I'm here with my friend Bob Dedick today. We're going to talk about what drives the price of gold, what drives the price of gold and silver, but in our case specifically gold. My friend Bob has a lot of experience in investing, and investing other people's money is kind of a side thing that he does, and best I can tell, he's been pretty successful at it. Bob tells me there's a lot more to drive the price of gold than just trying to keep the dollar strong, for example. And on that note, we're just going to talk about what's going on. Price of gold this morning is again over $5,000.
It's in a volatile range right now. But
what drives the price?
Well, a lot of factors. One of them you mentioned, yes, is the U.S. dollar. U.S. dollars has an inverse relation to the price of gold. Dollar's down, gold's up, and vice versa. However, there's other things, supply and demand. For example, the central banks, and the world's central banks, are buying tons and tons of gold, which drives up the price of gold. Then there's other things. There's inflation expectations. There's geopolitical risks, as we know what happened out of Venezuela, what's going over in Iran. I would personally put those kind of on the back burner, to be honest with you, because what's really driving it, in my opinion, is a lot of the Chinese traders are playing with the price of gold and trying to affect our markets, and that has been well documented. The other thing we got to talk about is you need to separate gold and silver. Gold is traditionally a storage of wealth, as everybody knows. I know, Mark, you're sitting on 1 or 2 ounces of gold for a while, and your friend Neil Medley is even sitting on more.
Yeah, you are being facetious, I hope you know, because we have a little bit more than that.
But silver is a different cat altogether. Silver is more industrial based, and the thing, what's one of the primary drivers, even though it does go in tandem with the price of gold, it's a more volatile asset. But with all the data centers that are being built in the nation and worldwide now for the AI revolution, those data centers consume tons of gold. Is a primary use for electronics. And what's in those data centers? A lot of wiring. So that's one of the primary drivers of this. So that's a good thing. But again, you would think that silver would be actually higher than it is, because for the last decade, silver's is actually in a deficit. In other words, we're consuming more than we're producing. But those are the kind of the primary things that are driving what's going on. And I think that this is going to continue. Now, the volatility, that's just inherent, because one of the things within the market, specifically stock market, people may or may not be aware of, is a lot of what we call algorithm traders. They have programs set up so they literally trade in milliseconds, and that's why you see a lot of large fluctuations in the stock market, and now you're seeing them in the gold, because we had this great run-up. It came back to a support level. Now it's just kind of consolidating. So my guess is we're either going to stay the same or head a little north, Mark.
How does that apply to guys like me, guys like us? Go mining, don't go mining?
I obviously go mining because, number one, nothing lasts forever. I think now's the time to, if someone's looking at buying a gold claim, for example, or if they're looking at wanting to get into mining, now's the time, because I think you told me there's been places you are dredging that, what's your famous saying?
Well, when it comes to dredging, people have asked me if I was getting any gold, and you always get gold, by the way. At least my experience is you always get gold. It's about how much gold. And I've often said I was getting gold, and when they asked me, why did you leave? And I said, because I was getting just enough to keep me broke. And you're always looking for that next discovery that's actually not just profitable, but profitable enough to make it worth being there.
Okay, so those places that you're mentioning, what was the price of gold back then?
Well, we kind of hit it at the top. I sold at 1680 and 1720, and that was a spike, which I believe is similar to the spike we're seeing now, which is 5,000. After we sold, it went down to 900, and then from 900, it's gone clear back up to where it is today.
So let me ask you this: those places that kept you there long enough to go broke, would you go back to them now with gold at $5,000 an ounce?
They'd be very profitable, and that one other consideration there is where the price of gold has gone up. Often fuel tracks with that, so your expenses will go up, and that's not the case right now. Fuel is relatively inexpensive, so the mining expenses really haven't gone up much, if any. And the price of gold has gone up significantly. So yes, it's much easier to make a profit today than it was then.
So one other thing I will mention about if anyone ever takes a look at a chart, and you'll see a chart here, is when you see anything that goes parabolic, in other words, straight up, what goes up fast comes down faster. And you'll see that primarily in silver, it was in a parabolic curve. Gold, not so much. Any healthy market, I don't care if it's a stock market, metal market, it doesn't matter. You need to see prices that at some point stabilize. In other words, in order for something to go higher, it generally has to retreat, maybe a 10 or 15, 20% retreat, and then consolidate, and then it'll go higher. And it's a stair-step process. But when you see something like what silver did, specifically in the November, December timeframe, where it just went straight up, that should be your first sign to, if you wanted to sell silver, sell it. Gold, not so much. But to your point, Mark, I think it's a perfect time for anybody wanting to get into mining, even if it's, panning, high banking, whatever it is, because I think you could, you're not going to get, well, you could get rich, but you're going to have to move a lot of material. But I think
what you just said actually reminds me of some investing that I did. Oh, it was quite a while back, 15 years ago. A lot of my friends were getting into Bitcoin, and I was like, oh, what the heck, $2,500 right here. I bought into Bitcoin. It was rocketing upwards, and it was my investment of $2,500, whatever fraction of a coin that was at the time. It's like rocketing upwards, and the day that I bought, it plummeted. And when my $2,500 got to $900, I panicked, and I exited. And of course, that $900 today probably has gone back up to $6,000.
Yeah.
I like to buy high.
Okay, well, I hate to say it, it's a typical retail investor is they buy high, sell low. The professional investor basically sells to you. Essentially, that's what I do. I sell on the way up and buy on the way down. But that's pretty typical. I'm looking at the market right now, and I was trying to get a Bitcoin. I think last time I looked, Bitcoin was somewhere either 60 or 70,000. So, yeah, just let me do the investing for you, my friend. So what do you think our next video should be at?
Idaho gold claims are kind of a popular thing people are looking at. Buy a gold claim, don't buy a gold claim. I don't know, that might be something to touch base on.
I think it's a great way to end this is that let's talk about, should you buy a gold claim?
Sounds good.
Okay, we'll see you next time, buddy.
We'll keep you posted.